Hey, welcome back to this channel, Life Insurance Made Simple. Today we're talking about what is life insurance and why is it important to you. In this world, nothing is certain except death and taxes. So what is life insurance? Well, life insurance is a legal contract between on one side an insurer or a life insurance company and on the other side a policy owner. And it's a contract in which the insurer agrees to pay a certain amount of money to designated beneficiaries in exchange for the payment of premiums according to a specified schedule. So why is life insurance important? So we'll do here a simple exercise. I'm going to bring a few questions and I just want you to think through it. So the first question is, why do you have a car insurance, for instance? So some people would say, hey, it's because it's a requirement from the law. If we move a little bit from that requirement, you will see that it's because you want to gain some protection in case you get involved in an accident. And let's say it's your fault, you don't want to carry the full financial consequence of fixing someone else's car or paying for medical bills, right? That's why you want to have a car insurance, for the protection side. And if we extend that thinking to let's say your home, your apartment, or when you rent a car, if you sometimes do, you quickly see that the main reason why you want to have an insurance is for the protection, right? Now, if we try to bring that same order of thinking to our own lives, let's think about this for a second. How many days, how many months will you be able to survive? What about your dependents? How much time will you be able to maintain the current lifestyle that you have now if you could not work, let's say for 6 months because of medical issues, for instance? What about if you pass away, right? Who is taking care financially of your dependents? Well, the way I like to think about why is life insurance important is if we can protect our cars, if we can protect our homes, if we can protect our assets, what about protecting this main asset that we have, which is ourselves, especially when we think about our dependents? Who is going to be financially supporting our dependents if we are not there? Or beyond, if you are not there, if we are laying on a bed because we cannot work for some time. So this is where life insurance come into the game. So the primary goal, if you guess from what I just said, of life insurance is protection. You want to make sure that you get protection. And it comes down to this question. Are you concerned about the future of your family if you are not there? And when I say future here, it's from a financial perspective, and not only family dependence, because it can expand beyond the boundary of the family, right? So having a life insurance allows that in the event if you pass away, there is a death benefit that will be paid, and that death benefit will provide an income replacement. Now, the consequence of that is your family, your dependents, will be able to maintain the same lifestyle. And when I say that they will be able to maintain the same lifestyle, it could mean staying in the same house. It could mean be able to attend the same schools, being able to still ride in the same cars, and so on and so forth. The list goes on. Now, another reason that why it's important to have life insurance is for concierge planning. In the event you pass away, you don't want your family to necessarily struggle through the concierge planning. So if you have a life insurance, it can provide enough money to cover all the expenses that are related to your concierge planning. Now, beyond that, you also want to think about asset protection. So let's say that you have a loan on your house, you have a loan on your car. Having a life insurance in the event you pass away will bring some money that could help pay all those debts. And finally, some part of your debt benefit could be channeled towards kid education. So this is not a full list. Here I'm just trying to give you an overview so we can start having a brainstorming session about life insurance. Now, if you're like me, all I knew about life insurance was what I just mentioned. Death benefit, protection in the event you pass away. But I couldn't be more wrong, because the protection doesn't only apply when you pass away. The protection is also important when you're still alive. And that's where I want to bring this question again. How many days, how many months could you survive if you could not work because of a qualified medical situation? So this is where now we turn to what we call accelerated death benefit, which basically allows you to access part of your death benefit while you're still alive, assuming that you're undergoing a qualified event. So for instance, if we go to, let's say you are contracted with life insurance A, And that life insurance can have something like this in the insurance contract that you have with him. Up to 90% of the death benefit can be given to you in the event of a stroke. This is just an example to make it simple. So in practice, let's say you have a death benefit of 300,000. That could mean that if you have a stroke, you can claim up to $270,000 of that death benefit while you're still alive. This could make a huge difference. Just think about that. If you have to lay in that bed for 6 months, you will not have to worry about your bills. You will not have to worry about what your kids will eat, and so on and so forth. So you have to understand that life insurance is not only about death benefit, it goes far beyond that, right? Now, as we will see in future videos, there are specific type of life insurance that allows to build some cash reserve while you're paying your premiums. Well, you'll be able to access that cash penalty free, which is different from some other vehicles that are limited by age, things like 401k, for instance. Now, beyond that, depending on the type of insurance policy that you have, that cash reserve can basically gain positive return, and when the market crash, you don't lose that principle. So, like I said, we'll talk about that. Here, I'm just trying to open your horizon so that you understand that life insurance goes far beyond the death benefit. And also, that cash reserve that is growing, very important thing here, is growing tax deferred. So while it's growing, there's no taxation here. And if it's properly accessed, you can access it tax free. So one more time, you have to understand that life insurance is very much foundational. It's something that you want to have in your portfolio because it will provide you a good defensive line, but also it comes up with some benefits that can be very useful depending on situations that you're traversing in life. And talking about situations you're traversing in life, when I sometimes talk to young folks that are still in good health, most of them will tell me, hey, this is life insurance thing, I'm not yet old enough. I'm going to see that in a few years from now. It's not important now. Statistics say that I'm not going to die now, and so on and so forth. So I wanted to address that a little bit. It's important that you understand that life insurance is important at any age, as we'll see a little bit later on. But before going there, I want to show you some statistics that are related to health. And on the right side of the screen, you will see my sources. So the first one is a book, The Financial Pocket Knife, that I read. And this is what it states. A 25-year-old male has 24% to 49% chances of having a critical illness before age 65. And when we're talking about critical illness here, we're talking about things like cancer, heart attack, and so on. And the way I like to think about that is, I'm thinking about my friends I tend to hang out with, and I take 3 of them plus me 4. And when I think about that, this thing means that it's possible that 2 or maybe 3 of us might encounter this type of issues before we turn 65. So this is very frightening because my friends, we are taking care of our families. So what happens to our families if we cannot provide, if we are not there? So you have to think about that when you think about life insurance. The next statistic that I want to bring, and it comes from the second reference, you can check it out. It states that every 40 seconds, someone in America has a heart attack. So we tend to think that, hey, this is for other people, but you have to understand that statistics say that this is something that happens more often than you think. Now, thank God, due to medical advancement and technology, 90% of the heart attack victims survive, right? But you still have to think about this. Even if you survive, you might need some time to recover, right? And the last statistic that I want to bring out is from the American Heart Association states that 50.4% of US males and 43% of females aged 20 or more have hypertension. Can you think about that? So what does all this picture tells me? This picture tells me that we should not take our current health for granted. We don't know. We just don't know what will happen. So if other people can endure this type of crisis, what makes us so special? We don't know, right? So having that in mind, the question is, who is paying your bill if you have something like that and you're recovering, or if you pass away? I tend to believe that we also have, especially when you have dependents, we have to also show that we love and respect them by doing everything in our power to make sure they are protected from the financial consequences of us not being there or us not being able to provide as we used to. So now what I did is I tried to think a little bit about why life insurance will be important for people depending on their age. And what I did is I came up with these categories. Now, this is my own opinion. The list I'm going to show to you here is not an exhaustive list. I just want you to think through it. I just want you to start brainstorming about this. Regardless of your age, one thing very important is final expenses. So dying is not a matter of if, it's much more a matter of when. So because we know that will happen, of course we want it to happen later than sooner, having a life insurance can prevent your dependent from carrying the full financial burden of your final expense. Beyond that, when people are a little bit younger, they tend to think that, hey, we have time. But you have to keep in mind that a life insurance is just not something that you go to a store and you purchase. No, you have to qualify for it. Remember that a life insurance company is in the business of managing risk, which means that if you present more risk to the company, either they increase the cost of insurance, meaning the premiums that you pay, or they just deny you. So while you're still insurable, you want to make sure that you lock that insurability. And that's what this second point relates to, future insurability. While you still have that good health, while you're still young, just lock that insurability, because you don't know what will come tomorrow. It takes just an accident or something happens, and then you're not insurable anymore. The younger you are, the healthier you are, the lower the premiums that you will pay, because your cost of insurance is also lower. Now, the next point that I want to touch on is, when you're younger, keep in mind that you can leverage a cash reserve accumulation. So if you're 20, and let's say that you plan to retire at age 65, that's a good 40 years of cash accumulation, which could become some substantial money that you have by the time you retire. Now, if you're, let's say, already close to 50s, it doesn't mean that you cannot use it. It just means that we have to think about how we can design it if your goal is cash accumulation. Now, when you get into the range of 20 to 50, usually that's the time where you start getting a family, getting married. Now you have to think about, oh, I have dependents. How do I secure their financial stability? That's also why life insurance is important, right? Now, when you get closer to the 50s, and that can also be applied to the range 20 to 50, let's say you're close to 50 and you lose your job, and it takes you some time to find a new job, maybe 6 months. If you have had a life insurance policy in which you had accumulated cash in your cash reserve over the years, that money, remember I told you, if it's properly accessed, you can access it tax-free. So that money can become an income replacement while you're trying to get your next job, right? And that's also valuable when you're in the range 20 to 50. Now, think about this. People tend to live a little bit longer in retirement. So I'm sure that you won't mind having an additional source of income in your retirement. On top of that, if you still have some debt, that cash can help you pay or clear off those debts, right? And of course, it's also time to start thinking about estate planning and wealth transfer. Some people want to leave some money to charity organizations, right? So having a life insurance can give you that opportunity, so that when you pass away, the charity organization of your choice will be able to receive a nice check from your life insurance company. Having said that, this is where I want to stop this video. I hope that you found this content valuable. If you did, please like and subscribe. And of course, if you want to talk to me in a private setup, please check out the link to my calendar. Book an appointment. It's a free appointment. Stay tuned and take care of yourself. See you in the next videos.